Assalamualaikum and salam sejahtera. My name is Norisa Akmal and today my group and I will present to you our newspaper review article where the title that we are assigned to, GST will double the tax revenue over SST. First of all, from our understanding, GST is the consumption tax that applies to all economic sectors and to all goods and services produced in Malaysia, including export. It does not apply to certain items and services that fall under the Minister of Finance zero-rated supply and exempted supply orders, which are set by the Minister of Finance and published in the Gazette. On the other hand, SST stands for Sales and Service Tax in Malaysia, where manufacturers are subjected to the sales tax and customers are responsible for paying the service tax when they are used taxable services. From the article, according to Sapura Sari, the lead economist for Malaysia at the World Bank, claimed that research indicated that GST will be more effective at boosting government revenue than SST now in place.
Hi, my name is Nur Adramitinasi and today I want to talk about GST. GST is proposed to replace the current consumption tax, for example, the sales tax and service tax (SST). So the introduction of GST is part of the government's tax reform program to enhance the efficiency and effectiveness of the existing taxation system. So the first impact of GST in Malaysia is improved standard of living. So the revenue from GST could be used for development purposes for social infrastructure like health facilities and institutions, educational infrastructures and public facilities to further improve the standard of living. So next, the second impact is affect the lower income consumers on purchasing power. For example, corporation of tax burden under GST with that of the current sales tax and service tax (SST) based on average monthly household expenditure of various income group, which are poor, lower, middle and high. But on the good side, with GST, taxes are levied fairly. So next, the third impact, nation. The third impact is impact on nation building, which GST is a better and more efficient method of revenue collection for the government. So more fund can be channeled into nation building project for progress towards achieving in a high income nation. So the last impact of GST in Malaysia is increased global competitiveness. So the prices of Malaysian export will become more competitive on the global stage as no GST is imposed on exported goods and services, while GST incurred on inputs can be recovered along the supply chain. This will strengthen our export industry, helping the country progress even further. And in conclusion, GST is capable of generating a more stable source of revenue to the nation because it is less susceptible to economic fluctuation.
Next, the impacts of SST. Firstly, the impacts is lower tax revenue. The SST system is reported to contribute less tax revenue compared to the goods and services tax GST system. Secondly, the impact is regressive in nature. The SST system may be regressive in nature as it tends to affect lower income groups more adversely. Furthermore, the impact is need for subsidies and assistance. This implies that the SST system may have resulted in increased financial burden on lower income households, necessitating the needs for additional government support to alleviate their economic challenges. And lastly, the impacts of SST is limited coverage. The SST system may have limitation in terms of its coverage.
Hi and Assalamualaikum, I am Muhammad Hafiz bin Abdul Najir and I will explain about the two taxation systems that have been implemented in Malaysia, the Goods and Services Tax (GST) and the Sales and Service Tax (SST). We will explore their key differences and how they impact businesses and consumers. Firstly, let's talk about the GST. Introduced in Malaysia in 2015, GST was a value-added tax charged at every stage of the supply chain, from productions to consumptions. It applied to a wide range of goods and services, including some essential items. Businesses with an annual turnover exceeding 500,000 ringgit were required to register for GST. The tax rate for GST was 6%, which was applicable to the final price of goods and services. However, it is important to note that GST was repealed in 2018.
Arahan telah diberi supaya kita tak kutip GST lagi dan kita akan cuba bayar balik.
After the repeal of GST, Malaysia shifted to a new taxation system known as the Sales and Service Tax, or SST. SST replaced GST and brought about some significant change. Unlike GST, SST is charged only at the final stage of the supply chain, specifically at the point of sale to the end consumer. This means that businesses are only responsible for collecting and remitting the tax when they make a sale. SST also has a narrower scope compared to GST. It applies to a specific range of goods and services, with some exceptions and reduced rates for certain items. As for the taxable threshold, businesses need to register for SST if their annual sales exceed 500,000 ringgit for sales tax and 1 million ringgit for service tax. The tax rates under SST vary depending on the type of tax. For sales tax, which is applicable to goods, the rates range from 5% to 10% based on the category of the product. On the other hand, the service tax rate is fixed at 6% for taxable services provided by registered businesses. It is worth noting that the SST is currently in effect in Malaysia, providing a new framework for businesses and consumers to navigate taxations. The shift from GST to SST aims to simplify the tax system and ensure that the tax burden is distributed fairly. In summary, the GST and SST are two different taxation systems in Malaysia. GST was a value-added tax charge at every stage of the supply chain, while SST is a sales and service tax charged only at the final point of sale. SST has a narrower scope, specific threshold, and varying tax rate for different goods and services. The shift from GST to SST aims to create a more streamlined and equitable tax system. Thank you for your attention, and I will pass to the next presenter.
Assalamualaikum and hi, my name is Nur Intashafiza Kamal, and today I will explain about the benefits of GST and SST. The first benefits of good and service tax, which is GST, is high transparency. It is because of they will know exactly whether the goods they consume are subject to tax and the amount they pay for. The second benefit is exports are zero rated and eligible to claim input tax. Exports and overseas services are zero rated under GST Act Section 21(3). These supplies have 0% of GST. The third benefit is increase in tax productivity. Taxes rises and the government must use GST's funds more. Low-income clients' purchasing power may also be affected by price changes. And the last benefit is business friendly. Under the existing system, many businesses pay higher taxes and tax on tax, which is known as cascading tax. GST input tax recovery reduces by business costs. Next, I will explain about the benefits of sales and service tax, which is known as SST. The first benefit is simple and straightforward. It is because of the tax burden will be reduced, and that is the overall increase in disposable income for consumers. The second benefit is no refund issues to business operators. The business cannot regain B2B SST. The commodities and supply network between enterprises would compound the tax. The third benefit is lower cost of living. It is because of the sales tax is charged just once by the manufacturer at the point of sales. And the last benefit is people-friendly. Compared to GST, daily food and beverage consumption would be cheaper.
As a conclusion, the government may consider GST compared to SST due to GST is the tax on consumption, which is useful when considering 60% of the economy depends on the consumption. However, the government need to find a way in order to ensure the lower income group tended to bear the worst of the taxation. That's all from us. Thank you.